Good day, everyone. In this week's Shallow Dive, we'll be covering a very remote stock called China Everbright Water. So let's get into this. China Everbright is a water environment management company, all right? And you will note that its revenue is almost entirely generated from its water environment management business in mainland China, covering these municipal and industrial water treatment projects. Okay, if you look at deeper into their revenue, about 29% comes from construction. So they need to be able to keep earning all these projects as well as contracts in order to survive, with recurring operation services at 46%. So there is a maintenance and a stable kind of component. Market capitalization is about 400 million, profit margin about 15% net margin. Actually, not too bad. All right. What is attractive that got me to actually read a little bit about the company is that it claims to have a forward price to earnings ratio of about 3 to 4, and the price to book ratio is about 0.3. Now, why is this very important? For the people that know me well, you know that I'm deeply influenced by a book called Main Street Millionaire by Cody Sanchez. And the idea is to buy these laundromat kind of companies, take over from these aging founders of a business. Uh, and generally, the price is between 3.5 to 4 PE. So I get very excited when I see a price earnings ratio that is very low, below 5, because it allows me to buy these laundromat-like companies from the stock market directly without very long-term negotiations and without the illiquidity. I'm starting to become a very deep value investor on top of just being a dividends investor. All right, so I do not have a position in this company, so please take this with a pinch of salt. Okay, I am considering one. All right, but I do not know when I would actually buy this counter. All right, when I did this recording, I don't have it at the moment. And SGX is a recent article on this company as well. You can go into the China Everbright Water link here. It will give you a better idea about what the company is doing. But like many of these 10 out of 10 kind of reports, Q&A, it tends to be written from a company management perspective. So for me, I like to create material from a retail investor perspective, and I can afford to be less politically correct when I create my videos. Okay, so let's dive into the dividend and free cash flow analysis. I'm sorry, my face is covering the numbers. All right, it pays about 2.05 cents in May and August every year, and dividend payouts have been occurring for the past 5 years. Do note that the 2024 numbers are covered, but generally the cash from operating activities is a negative number, but it is a low negative number, right? Compared to 2023, where you see this 528 million, 528,000, I think, in a negative form. All right. So if you look at the free cash flow, it's been negative. Okay, it's been negative, but at the same time, the forward dividend yield is about 8%, which is positive, right? So where does the cash flow comes from? It doesn't come from operating the business. I went into the cash flow statement and I find that it actually comes from cash flow from financing. It is either raising capital and using the money to pay you in the form of a dividend, or it's borrowing money from a bank. All right, so it's something that you need to be very concerned about when you invest in companies like this. The business is not generating cash flow for you. Okay, but I'm willing to take a closer look. All right, I'm willing to take a closer look. Okay, because the payout ratio relative to earnings is still relatively low at 30%, and dividends is high. So we could be looking at a situation where dividends will decline moving forward, and there might be some capital losses to accompany it. All right, so that's something that you always need to be very careful about when you're dealing with plays like this. Okay, so this is a dividend yield play for you pigs, right, like me. Okay, but it's also a very deep value play because you're buying $1 worth of assets in the financial statements for 30 cents. All right, so some things are cheap for a reason. Okay, historical returns are strangely quite good, right? You have 7.8% over the past 10 years. Risk is high. Standard deviation is higher than normal, right? At 33%. It's about, could be a beta of maybe double that of the STI. Okay, Maximum drawdown, if you really time the markets wrongly, you can lose 40% of your capital, right? But what I really like here is this annual skew that is a positive number, 0.0319, okay? Which means that it's got this potential, right, for very lucky streak, lottery-like kind of return. So if you love buying 4D, you love buying Toto, right? Why not put a small position in a company like this? Because it really does have the capability to melt upwards, all right? The upward swing is very aggressive, but as it declines, it may be very slowly declining over time, okay? Yeah, another advantage is that it's got a low correlation against the STI, so it works very well as some kind of a satellite holding compared to your REITs and banks kind of core portfolio, all right? Okay, so how to think about Everbright China? It's very difficult to find a human analyst that's willing to look at Everbright China. But if you look at a non-human analyst, that means the websites that use AI to come up with analyst reports, you find that it is undervalued, okay? And there's a heavy upside potential to about 34 cents, right? So very strong upside, right? And just to make sure that there is you're not really in an industry that is in decline, I got AI to tell me the wastewater treatment in China, is it likely to grow for the next few years? And it says that it is growing at about 8 to 9% compound annual growth rate until 2030. All right, so at least we are not in a doom kind of industry. Okay, okay, but there are concerns about the cash flow pressure. Will it run out of cash? How heavy the capital expenditure is. You notice that the capex is fairly regular, right? And it's a certain amount every year. So you have to like update your equipment, you know, change something, you know, in your company to keep things growing. And it's very disturbing are trade receivables. When trade receivables go up, that means maybe your customer is not paying up on time, all right? Okay, so you want to look at the company's ability to improve cash flow generation and manage the debt that's linked to expansion. All right, you want to look into this. And amazingly, right, with a few minutes on artificial intelligence, we could dig out all these important points, but it is not stated in the original SGX interview, where they really need to be talking about debt, right? And whether do they have access to cheap liquidity, right? Cheap loans. Okay, so these things need to be dug up if you want to invest further. All right, the big strength is that this is a state-owned enterprise in China. Okay, and it already has recurring revenues from supporting these waste management kind of facilities, right? The weaknesses are very glaring. It's got a negative free cash flow and rising receivables. Okay, but there are opportunities to come from China's environmental policies. Now, the Chinese Communist Party is actually very green. They're trying to improve the environment. Okay, but there are seriously credible threats. All right, heavy exposure to Chinese municipalities, weak credit profiles. You know, it can impair cash collection. Okay, so this is actually a very, very polarizing stock. So what do you need to do before you want to make a decision whether to pull the trigger on China Everbright? You want to dig deeper into the water environment management business. What does it entail? You want to figure out whether the company has enough liquidity to last 3 to 4 years. According to ChatGPT, I think that the financial statements will allow the company to last 1 to 2 years, right? You only survive for 1 to 2 years. After that, things need to happen. Okay, you can also look into the actual municipalities being served by the company and see whether they can pay up on time, you know, but I suspect you will need to know a little bit of Mandarin to dig into this situation in China. It could be very opaque externally from a retail investor. Okay, but as it stands, because of the growth in the waste management industry, the high yields about 8%, and the low price to earnings ratio, this could be a classic stock that's like a cigar with a few puffs left, right? So if you follow Philip Fisher and the old Benjamin Graham style of investing, you want deep value, okay? You want to look for a cigar with a few puffs left. This is a very good place to start, okay? But like for me, I think the biggest problem is that the cash flow is unsustainable. And so this is not something that you will have to allocate a large amount to, right? So even if I play this, I'll be putting in at most $1,000 into the stock just for fun and just to see what happens, right? And I'll certainly be able to find many other China stocks like China Sunshine. You know, there are all these wonderful stocks And the word China, to be fair, is a little bit stigmatizing, like China Aviation Oil, right? So there might be good value bargains if you're willing to look at the China word. For many years, Cecil REIT, that is Chinese retail, has been producing wonderful dividends for investors, but dividend yields are high because most of the assets are located in China, right? Yeah, and the other thing is that because it is water related, environment related, there has some shades of high flux that is perhaps creating some sort of a negative bias, negative mind share in the view of the retail investor, right? So at the very least, this is a very good start for you to actually consider this stock, and I would really appreciate it if guys go deeper and on the comment section share about what you've learned so that we can learn a little bit about China Everbright. Okay, and hopefully with enough information, I will gather the courage to put a very, very tiny, fun position that we can talk about moving forward. All right, so that's all I have for you for this week's shallow dive. If you like my material, you can subscribe to my channel. If you want to listen to my story, Google ERM intro, take the first link, and I hope to see you in my early retirement masterclass preview. Thank you very much.